Hi everyone, this is John Snyder from the Economic Truth Report here, and today it's the Economic Truth Report 34. And today we got a real treat for you guys. We're bringing back a good friend of mine that I talked to for a while. I known him for a bit, and he has some amazing projects on the go. Chris Galizio, he's the executive producer of The Money Game, which is a really amazing movie that's coming out about free markets. Get that, like it's very exciting. I seen some clips from it you sent me, and some of the stuff that's been going on behind the scenes, and we can discuss a little bit what's happening. So I'm very, very excited about that movie because it's very needed. Educational movie. It's not really an educational movie. It's more like an entertaining educational movie. So super excited about that. And of course, Chris, you got almost. I've looked at your profile. You almost got what 3 decades in the financial markets. So you got a little bit of knowledge about what's going on out there. So pleasure having you on, Chris.
Thanks, John. So I ran a growth fund for Fidelity for 11 years. I ran a hedge fund called Focused Capital, where I wrote a white paper called the $340 trillion problem, referring to the dollar system, and how that's the problem. But nobody reads white papers. So I decided to make a movie called Money Game, where everyone will see. Money Game is kind of like Good Will Hunting meets The Wolf of Wall Street. It's rated R. It's a drama. We tried to use language that everyone will understand, to understand that the ecosystem of capitalism is now broken. Think about it. If you remove risk from a system, the money game, interest rates. Interest rates, as we all know, that as interest rates fall, asset prices rise. Has anyone thought about what happens when interest rates go negative? When interest rates go negative, all assets are worth infinite. In the movie, we'll say, my coffee is worth infinite. My desk is worth infinite. My chalkboard's worth infinite. And I can prove it to you mathematically. All of finance is based on one simple formula, the value of $1 paid annually. If interest rates are, as interest rates fall, asset prices rise. If interest rates are 10%, it's $1 divided by 10% is $10. As interest rates fall to 1%, it's $1 divided by 1%, which is $100. During the movie, as we shot the movie, interest rates would have been 0.66% because it was during COVID.
Yeah.
And interest rate in the value would be $152. In the movie, we're going to say, if interest rates go to, who here is willing to give me $152 if I give you $1 forever? We have the dumbest kid in the class at community college on first day say, we'd all be dead by then, to which the professor says correct. And that's the point, is they drove interest rates down by controlling interest rates, by intervening in bond markets, and they drove asset prices up. Now what you're doing is you're effectively paying infinite for stocks. And I can prove it. There was a deli in New Jersey, just a simple deli. And I'm going to give you that example because it's one of the most simple examples. Everyone knows what a deli is. They were making $5,000 a year and they were losing, they had revenue of $5,000 a year and they were losing $400,000 a year. Stock traded as high as $115 million. It's called Hometown Deli, right? You can look it up. But my point is, across the board, they drove interest rates down, and now you're the buyer. You're the buyer at infinite, because people still believe you're living in the capitalist society. But if the Fed intervenes in bond markets, the theme of the movie, capitalism requires risk, interest rates, to allocate scarce resources. If you remove risk from a system, the ecosystem changes. Think about it. If you remove the lions from the savannah, what would happen? Well, the gazelle population, passive investing would explode higher, right? 60% of markets today are passive, but then they'd be competing for scarce water resources and die off. So we actually put that, the professor says that in the movie. What would happen if we remove lions from the savannah? The gazelle population would explode, but then they'd be competing for scarce water resources. And then we have the biggest line in the entire movie. When the Fed intervened in bond markets, they broke the ecosystem of capitalism. So now what you're seeing is a system where there's no price discovery. And why did the passives and quants, which now represent 85% of the market, why did they win? Not because they're smarter, not because AI is better, but because they have no morals, right? Any human would have looked and said, well, I was actually talking to an investment person. It's so hard to convince investment people because they've been gaslighted for so long. We were talking about Uber. Uber last quarter grew at 11%. So the company trades at $122 billion and lost $3 billion last year. Who would ever, if you dropped in from Mars, you'd look and say, why would I buy that company? At 100, that's never earned a profit. They've lost money year in and year out. It's a financing system at the end of the day. But the financial community's been so gaslighted they can't see that 2 + 2 equals 4. They think 2 + 2 equals 4,300. So it's just a very interesting time that we're sitting in. Yeah. Stocks are disconnected from fundamentals. I mean, as a matter of fact, what I'm doing right now is I've been writing the 10 misperceptions in markets. That number one is that people are investing. It's not people anymore; it's machines, right? Yep. The ecosystem changed. So it's just a very interesting time. We're watching that that stocks are completely disconnected from fundamentals, and people still believe markets are efficient. It's just a very interesting time we're living in.
Yeah, no, exactly. And we're looking at one interesting thing that happened when we talk about free markets, in my opinion, is what's going on in Argentina. In Argentina, you know, they had an insane amount of intervention. You know, the heavy socialism that's been going on there. They used to be one of the richest countries in the world back in the day. And of course, like during the time since then, they had multiples of devaluations where overnight, basically, your currency becomes devalued because the government is too over indebted. So they take the value of the currency down. I had a friend of mine in 2001. He lives here in Winnipeg. He had a business down there. His dad lost the money in '84 from one of these devaluations during when he was retiring, by the way. And I think that's coming to a lot of countries, by the way, at devaluation event. But what happened was that he, had his life savings. Let's say he had $1 million, life savings. Well, overnight, the $1 million went from being worth $1 million in purchasing power down to 250,000 in purchasing power. And he thought he was going to outsmart him. So it's like, okay, I'm going to put it in dollars. I'm going to be a little bit smarter. I'm going to put it in dollars. Well, what he didn't understand is that he put it in Citibank in Argentina in US dollars, but it's an Argentinian bank regulated bank. Like it's a US bank, but it's regulated under Argentinian banking law. So what happened was that Argentina, during the 2001 event, they took his US dollars, made it into Argentinian pesos, and devalued it. And so he wasn't safe. So what has happens is that a lot of people are, completely fed up. The government is massively overbloated. 4 in 10 lives in poverty. I think almost 6 out of 10 works for the government. And so people are kind of fed up. And what's interesting, there was a guy there called Javier Milei. He's an anarcho-capitalist like me. I'm an ANCAP, by the way. I don't know if you knew that, but he wanted complete, utter, and free and fettered free markets, real free markets, where there's no government intervention. Nobody can get bailed out because they're too big to fail, and so on. He actually got the votes, but guess what? Guess who voted mostly for him? Oh, it was the 30-year-olds, and a lot of the poor people. They're desperate because they've been destroyed by the weight of the government on their shoulders, basically, and so they just wanted something else. And it's interesting, he's trying as well as he can, with the massive government. He cut a whole bunch of government departments. He's trying to privatize everything in Argentina right now, and but he's kind of fighting an uphill battle. I see he's got to cut was it 300,000 different laws that they created. So he's been working on it. He had the team behind the scenes, I think, trying to get this process to get going. But now he hit a little bit of a bump where he's fighting the unions right now in court over some of the cuts in laws. Where I found one of his best laws that he passed. Not that I like the dictatorial, a president being allowed to pass laws like that, but he actually passed a law that any government official is not allowed to use the word free in conjunction with a government program.
Right.
I think that's probably one of the best laws I ever heard in a long time. But anyway, that's a little bit what's coming toward talking towards real free markets is kind of what I think it's trying. It's really it's still not drowned and killed yet. The free market is always there. In an intervention market, it's really called the black market. And just recently, everybody's talking about, oh, he devalued the currency in Argentina. What people don't know is the actual real rate, the black market rate, or the free market rate, as we should call it, was 800 pesos to a dollar, and the official was 300. So it's like everybody's like, oh, he devalued. No, he didn't. He just let the market actually discover the price of the
Price
Argentinian peso.
discovery. That's the
Exactly.
point.
Yeah.
Right. So one of the quotes from the movie. Now, keep in mind, this is a rated R movie, right? It's our job as a movie producer is to entertain. It's not to lecture, right? So one of the quotes from the movie is if the government assumes all the risk, it's the currency that's at risk. It reminds me of a scene from Superman. Lois falls out the window. Superman dives down to save her and says, "I've got you." To which Lois says, "But who has you? What are you back?" Right. So in the reality is, in Argentina, they were backed by nothing.
Yep.
Right. So by the way, think of what's happened nominally in prices to Argentina, because this is the money game, right?
Yep.
When you control interest rates, when you manipulate markets, you lose the currency. It's the currency that's at risk,
Yep.
right? Think of what happened down there. They devalued the currency, and when you look at it in peso terms, you're going to see that their stocks went up. But the stocks going up is not a sign of a strong ecosystem. It's a sign of a decaying ecosystem.
Yeah.
Think about gazelles. If you saw the gazelle population explode by 10x, would you say, "Oh my God, look how healthy the ecosystem is. Look how many gazelles there are out there"? Or would you say there's a problem with the ecosystem?
Well, probably the PhDs would say that it's healthy because they don't know.
Correct.
But anyways,
correct.
Yeah.
The irony is they don't see it. They're being gaslit. There's a quote from Joseph Goebbels, the propagandist from Germany.
Yeah.
It's the big lie, right? The big, and what he says is, if you have a big lie and you keep repeating it, eventually people will come to believe it. Think about it. Number one, we're living in a capitalist society. Wait a sec, but you're intervening in bond markets. That's not capital, right? And by the way, 80% of the market is now passive and quant, run by one model, right? If the entire system is run by one model, which is the BlackRock Aladdin model, it's the modern asset management, it's factors and all that stuff. If everything's run by one model, it's not millions of independent thinkers, is it still capitalism?
No, it's central planning, for crying out loud.
The theme of money game, capitalism requires risk, interest rates, to allocate scarce resources.
Yep.
If there's no risk, is it still capitalism? Is it? And by the way, what happens is the ecosystem changes. So now it's one model. It's not millions of independent thinkers. So if it's not millions of independent thinkers, is there price discovery? And if there's no price discovery, does the system start to misallocate resources? Everyone's waiting. Reminds me of a quote from Nike, from the Nike chairman. I can't remember his name now. But what he said was, everyone was waiting for the next Michael Jordan on the basketball court, but he was walking down the fairway because he was Tiger Woods and he was on the golf course. In that respect, everyone's waiting for the next for the stock market to fall, but it won't be the stock market that falls. During a currency devaluation, just like you talked about in Argentina, everything goes up.
Be a crash up, yeah, exactly. Like Venezuela, like Turkey right now, same thing.
Look at Venezuela. Look at the during the currency collapse, the stock market went like this because the currency was falling. Same thing is happening right now. Notice that the stock market just went up, right? From October, when Xi met with Biden, the dollar fell, DXY, and everything went up again. But everyone's looking at that as a positive sign. But it's like the gazelle population exploding esque. But then we're going to be competing for scarce water resources because the price of everything will go up and die off. Yeah. So I think what you're watching is the end of the dollar system. We don't say that in the movie because, again, this is a entertaining movie. We have a good guy, we have a bad guy, it's basically Goodwill Hunting meets Wolf of Wall Street. Goodwill Hunting because we have a mentor relationship between my lead character James and Professor Gardner, who's basically trying to tell you that things don't make sense, right? When interest rates go negative, all assets are worth infinite. My coffee is worth infinite. My desk is worth infinite. Does that make sense, right? So we keep trying. He's trying to explain things to James. He's trying to put it in perspective, and he's trying to tell him you should be buying real assets, things that make sense. On the other side of that, We have the villain in the movie is the CEO of Tappet. It's like Snapchat. It's like TikTok. The CEO is on, his name's Bryson Hill in the movie, and he's making billions on his app. James and Bryson just played basketball together because it's a movie, right? At the end of the day, this is my Wolf of Wall Street character. So Bryson's sitting there. They just played basketball. He's got both of his middle fingers up like this. See if I can do it. There's my two middle fingers, and he's saying, James, why do you think my company is trading at $4 billion? Why? It's a concept, man, and I'm the concept, right? So we're trying to show people, but again, you're going to see Tappet that in the background he's losing money, right? They're saying he's trying to his company's going public, and he's saying, don't pay them. We don't have the money. Don't pay them yet. Until our company goes public, don't pay, defer payment. So we're trying to show the stresses in the background, right? At the end of the day, these companies are losing money. 30% of the S&P 500 loses money. They're zombie corporations. They can't meet their interest expense. So the bet you're making isn't that in fundamentals, because there is no price discovery in markets.
Yeah.
The bet when you're buying these companies, I had a conversation again about Stitch Fix and Rent the Runway, and I was talking to a fashion analyst who I'm never going to be able to convince, but they only have 2 quarters left of cash flow. How are they going to survive if the Fed doesn't cut rates? If interest rates go up, they go bankrupt. So the bet you're making is the Fed has to assume the risk. But when the Fed assumes the risk, then it's the currencies at risk. So that's what you're seeing. You're seeing the same type of stuff in the G7 that you're seeing in Argentina. The money game is already played out in Argentina, and now it's starting to play out in the G7, and eventually it's going to play out, right? But it's so fascinating to watch that people still believe this price discovery in market and that someone's going to protect them, right? At the end of the day, but again, when the government assumes all the risk, it's the currency.
Yeah.
So and you're watching it in Argentina, you saw it in Venezuela, you saw it in Germany. So we only have 2 classroom scenes because, as my director says, I can't sit my audience in a classroom, right? But the second classroom scene is the professor's going to lift the book, The Efficient Market Thesis, and he's going to toss it aside and laugh. He's going to say, smart people thought the world was flat once too. Because what you're living in, because it's groupthink. Right? That markets are efficient. If you dropped in from Mars and looked at Uber and said, I'm going to pay $120 billion for a company that loses money and is growing at 11%, which, by the way, 11% isn't much higher than inflation. I don't think any of us believe that inflation is 3%. Or the grocery store.
Well,
right?
the people that actually live in the real economy, I would say, definitely doesn't believe it. But maybe the PhDs, at the 900 PhDs at the Fed, live in their little mansions, in their little communities. They look out. It's like, oh, look out the window, and you'll see like that's what they're being taught in school. It's like, well, when they look out their window, they see a whole bunch of rich people that, live off of the system. And so they don't really see the real economy.
Well, the PhDs are being gaslit.
Yeah.
They're being told inflation is 3.1%. And what they're telling you is there's deflation. That's why the oil stocks trade at 2 times. I can find oil stocks at 2 times earnings.
Oh, it's wild, yeah.
Isn't it wild? I mean, Petrobras earned $7 last year. I think they paid a $7 dividend and traded as low as $9. Right?
Yeah,
so
it was. Let me tell you that it was my best investment last year in returns for the dividends.
It's amazing to watch. I mean, on the one hand, you can buy Rent the Runway or Stitch Fix, which loses money and has 2 quarters left of revenues, or Uber, or all these app companies, or Tappet from my movie. On the other hand, you can buy a company like Zim Shipping. I don't believe markets read the news anymore, right? Because it's 80% passive in quant. If it's 80% passive in the quant, who's setting prices? We actually tried to make this our opening scene. I couldn't do it because the AI was just too expensive. The AI was going to cost us $5 million just for this opening scene. You have a herd of a gazelle. You have a lion surrounded. The gazelle are going to attack the lion and eat it, and then we're going to pop up money game. The point being, there are no active managers left to set prices. So prices are completely disconnected from fundamentals. And yet, when you go to the PhDs, they're telling you there's deflation, and that's why the prices are up, because they have to build a narrative. Notice what's happening. It's supposed to be, everything's working in reverse, right? Let's take NVIDIA, for example. Okay. all of a sudden the price moves. Things should work this way. It should be the fundamentals happen first, then the narrative, then the price.
Yeah.
Right? Everyone agrees to that, right? But notice what happened. This price of NVIDIA moved. On a quarter, they lost, their revenues were declined by 8%. So revenues were down, right? Stock starts moving. Then the narrative, AI. The reason it's happening is AI. Then fundamentals. But the fundamentals don't come from selling microchips. And they come from selling stock, right? Because if the company trades at $1 trillion, all of a sudden you sell 10% of your shares and you have $100 billion sitting in your balance sheet. But it wasn't from selling semiconductors, it was from selling stock. Now you can build your system. So I would argue that this is a system, it's a financing system, not an investing system, right? And that's why I use the dumbest kid from community college to make that point. If who here is willing to give me $152, 1 divided by 0.66%, if I give you $1 forever? We'd all be dead by then. Professor Gardner, correct. Right. So, but it's so interesting to watch that in what the investors doing, they still believe they're living in capitalism, but they're not. They're living in a finance. It's not an investing system. It's a financing system. I mean, you saw it during COVID. I mean, here's a line from the movie. When they started printing money during COVID, notice the type of companies that went up the most: Peloton, Zoom, Wayfair, companies that lost money. Why did all the companies that lose money go up the most? Tesla, right? Because it's a system that rewards financing. It's a system that rewards companies that need financing.
Yeah, because it's a debt-based monetary system. So, well, like basically,
think about this. If you issue shares in a passive world, all those companies, Peloton, whatever, Amazon, whatever they are, all these companies that lose money, if you're issuing shares, if the ecosystem changed to all machines and there's no active managers left to set prices, who makes the adjustment for dilution when you issue shares every quarter? No one. There's no active managers left. So when you issue shares, your market cap goes up.
Because they buy them.
And then if the market cap goes up, what does the quants do? They see momentum build, right? They buy it.
Yeah, momentum, high frequency traders.
So it rewards companies that keep issuing shares. The reverse should also be true. You talked about one of your best investments being Petrobras, right? Petrobras, why did it trade so low? Because if you remember, they paid a massive dividend. It was trading at 14 at one point. Yeah. They paid a $3 dividend for the quarter, right? Then when they paid that $3 dividend, all of a sudden the stock falls, becomes smaller in the index. What would a quant do? They'd sell it.
Yeah.
It sold down to $9. So in a year that they actually made money, they paid a $7 dividend. Stock went down to $9.
Yeah.
So everything's working in reverse. Companies that earn money go down. Companies that need financing go up. It's not a it's a financing system. It's not an investment.
100%. Right. Yeah, it's a financialized system. Financialization is taken over. Who needs to produce something or create something of value when you could just go and make money with, getting more money?
What you're doing is you're selling shares. You're not selling. So here's another post I did recently on LinkedIn. Was BYD, which is the biggest EV maker, car maker in China, trades at 1/10 of what Tesla trades at. Okay, but BYD makes more cars. They sell more EVs. How can it trade at 1/10? I mean, think about the advantages that Tesla has. Tesla trades at 800 billion. BYD trades at 80 billion. If Tesla sold 10% of their shares, they have $80 billion to now go build more cars, and yet they're still underperforming BYD. BYD still has more sells more EVs.
Yeah, that's pretty wild, actually. Like how a tiny little company like Tesla is outperforming anybody, like in the car industry.
Even in think about what happened with Tesla. Why did Tesla go up? If you remember, was it 2, 3? I would say it's probably 3 years ago. Even Elon Musk says we were about to go bankrupt, right? So we had to issue shares. So issued shares popped, right? Because it's a system that rewards companies that need financing, right? Then the stock went up so much that they were like, oh my God, I might as well take advantage of the cheap capital. I'm going to issue more shares. Stock goes up.
Yeah.
Right. Because there's more shares out there. Then they decide to do a stock split. Stock splits, as you notice, send stocks up because there's more shares. There's it's a bunch of followers following followers, like a cat chasing a tail. There's no active managers left to set prices, which is the point I was trying to make with that gazelle and lion example from the beginning of the movie that we couldn't do only because the AI was too much. But we may have these quotes throughout the entire movie. One of the quotes is about GameStop. The Reddit guys finally figured out how to trigger the stampede of algorithms. Wildebeest, by the way.
Yeah.
Just aggregate a bunch of buyers, like waving a red flag in front of a bull.
Yeah.
Right. So what you're trying to do is, if you aggregate a bunch of buyers, all of a sudden there's thousands of buyers, and the quants are going, oh my God, the smart
momentum.
money. Well, the smart money, but there's no smart money left.
Yeah,
smart money's
it's all
gone.
dumb. Yeah.
Well, they broke the ecosystem. And by the way, there's a movie called Dumb Money now, right? The dumb money addresses the symptoms of the problem. We're talking about GameStop, whereas Money Game addresses the causes. The causes that interest rates went negative. When interest rates go negative, all assets are worth infinite. My coffee is worth infinite. My desk is worth infinite. My chalkboard's worth infinite. Does that make sense? Of course, it doesn't.
It does not. Yeah.
That's the system you're living in, and everyone's pointing the stock market. Well, the stock market believes, because it's all quants and passive. There's no active managers left to set prices. So you're relying on the government to protect you. The only thing that's sending that, even since October, when they met, when the currency fell, the stock market doesn't predict anything anymore. It reacts to Fed policy. By the way, it's also one platform. It's modern portfolio management, which is all these. It's the factor models. It's BlackRock's Aladdin, which controls the whole thing. So if one factor, by the way, Gary Gensler, the SEC chairman, came out and said there's a risk that everyone's doing the exact same thing, right? Because it's not capitalism anymore. It's essentially an economy. Right? Now that's something we never say in Money Game, but we say capitalism requires risk to allocate scarce resources. That's the theme of the movie. So if you don't have risk, then it's not capitalism. Can't be.
100%.
Right?
Like it's I just showed when you were talking initially there at the start, I showed the BTFP, the Bank Term Funding Program. That's a part of it. Like it's part of, like, quantitative easing is a part of that. There's no risk, right? And so,
Correct.
like the BTFP right now, they skyrocketed up. Everybody got all fine dandy, and then you don't hear anything about it because everything is fine. But you've seen it starting to skyrocket again because more banks are getting in trouble. Well, for what? Like what happened, right? Oh, guess what? The government, bailed everybody out during COVID, and then all that money got deposited into bank accounts, and then these guys, they had to buy, their treasuries to, have a counterparty to their deposits, and they bought them at next to nothing, in valuation in 2021. Oh wait, interest rates go up drastically. Well, who's going to buy the low yielding, bonds versus the high yielding bonds that's currently available? It's like nobody wanted to. So basically, you didn't have the good old cash run, where you take cash out of the bank. No, you had a digital run where people just left the bank to other banks, but they had to sell assets, and their assets was worth a lot less. And the problem is, like, when you talk about an asset too, like a government bond as an asset, to me doesn't, like, in my head, it doesn't really make sense that the government should be worth anything, their debt, because they're a wasting entity, So, but again, it's those programs, it's all these central banks that we created that sits there as a backstop for bad, for you take risk, but then you fail. Well, what should really have happened is that you should have lost your jobs. The company should have gone bust. And maybe, you had others buy up pieces of your company. But that didn't happen. You just get a handout, from either the government or from, being bailed up the big banks when the debt on these companies failed. They just get a handout from from the corporation that they run, the Federal Reserve.
I mean, that is the money game, right?
Yeah.
The money game is driving interest rates down. But think about it. As debt went up, risk went up, interest rates return went down. That doesn't make sense. Usually if risk goes up, because they took on more debt, your return goes up, your interest rates go up, right?
Yeah.
But the opposite happened.
Yeah,
Right. So
it's the inverted
the other
yield
thing is,
curve, right?
well, I mean, who would ever buy a bond with a negative yield in real terms from a country that's monetizing its debt?
No, it's pretty wild.
Right. I mean, I saw recently that Germany now has a negative nominal rate again.
Yeah, they're getting
Right.
it.
So
They're in a
think
depression right
on
now.
Main Street,
Yeah.
we called well, right. But on mainstream, if you if you give someone $100 and they give you back 99, on Main Street we call it theft.
Yeah.
On Wall Street we call it negative rates.
Or taxation.
Right. But who would ever buy that?
Yeah.
But yeah, they need to sell over the next year. Who's going to be the buyer of those bonds? At the end of the day, it's going to be the Fed. The Fed's going to end up buying it. They're going to step in. They're going to end up having to buy all the bonds because it's like a Hotel California. You can check in, but you can never check out. Right. So if they allow price discovery, if they allow capitalism, think of how they're afraid of capitalism. Right. They can't allow price discovery. By the way, everyone talks about the Janet Yellen, how Janet Yellen should have sold 100-year bonds when interest rates were 1%. Right? Why didn't she? Watch her actions, not what she says, but her actions. She didn't sell them. Why? Because there was no demand at that level.
Yeah, the same as Argentina tried to do that. They tried to pull off the 100-year
but there was
bonds.
no demand.
Yeah.
So
who in their wildest mind would buy 100-year bond?
Correct. But they were trying to sell them when interest rates were 1%. And Janet Yellen or Steve Mnuchin, the Treasury Secretary before him, would have done it if they could have, but they couldn't do it because there's no buyers. Watch what they do, not what they say. Mnuchin came out and said, we're going to sell 100-year bonds. Okay, we're not really going to sell them because you couldn't, because nobody was willing to buy them because people aren't that stupid. Again, I don't think it's people necessarily in markets. I think it's machines.
Yeah.
Right. And I can prove it by showing you that 80% of the market is now passive and quant. Right. So everyone thinks someone else is buying it. Right. Someone else thinks someone else is buying it. Someone else is thinking, but nobody's thinking. Think about this. Put it in perspective of Gazelle. If you were Gazelle, a passive investor, and you've never seen a lion, you saw a lion, you wouldn't run.
Yeah.
You'd be like,
it's like the dodo bird. You'd be a dodo bird.
Some of these gazelles need to get eaten. Some people have to lose money or else it's not capitalism. Right. So you have to allow it to then efficiently allocate capital. Right now we're pouring trillions into Dogecoin, NFTs, GameStop, Peloton, companies that lose money, Uber, Lyft. Like, I mean, I looked at Uber recently. I think they went from 80 billion in shareholders equity to 8. So they've burned $92 billion over the last 5 years because they were gifted this valuation. They sold shares to the passives, and then they burned through the cash. And now they want you to pay $120 billion for a company for a taxi car service that loses money. No, thank you. But it's not just them. It's 30% of the S&P. Right. But people still believe markets are efficient. Professor in the movie will have the efficient market thesis. He lifts the book, The Efficient Market Thesis, and he laughs. He tosses the book aside and says, smart people thought the world was flat once too. The most underused books in finance are history books. And he raises the story of the great German inflation from 1921 to 1924. Von Havenstein, the head of the central bank, had a choice: print the money or trigger the revolution. And every single time we could make this movie years in advance before it actually happened, because we know at the end of the day they're going to have to print the money, just like Argentina printed the money.
No, it's throughout history. Actually, today is actually this year is the 1,000-year anniversary of the creation of paper money, and the debt-based system is created by the Chinese and the Sung Dynasty back in the day. And so what better way of celebrating that by actually coming out with and exposing what real market should look like. It's nothing better like it, Chris. But what's going on around the world? Like we were talking, talk about the passive investors. What would happen when things turn on them? Like what could turn on them, and how would a stampede look like? I think it's going to look like a bailout. Like what happened in Japan there? Because Japan, the central bank bought when I looked at the numbers, it was 86.11% of ETFs that BOJ had to buy. How's that in comparison to what you see that will happen this next cycle, and how can it kind of unravel? How do you see things, moving forward from here to the end game kind of thing?
I mean, so I think Japan is kind of the canary in the coal mine,
Mm-hmm.
right? And I also think that the G7 all works together,
Oh yeah.
right? So I don't believe that even when you look at the DXY, I don't think it's really that relevant, because I think they all work together. So there's been 52 countries in history that have had debt to GDP of 130% or higher, and 51 of them have either hyperinflated or defaulted. And that was a study that someone did, and I can't remember the name.
Rogoff and Reinhardt, I think it was.
It could be, right?
Yeah.
But so they know. So what's the one country that didn't default? Japan. Why? Because it's part of the dollar system.
Yeah.
Right. So it has to be the entire system that has to go together. So now you are seeing that all of a sudden the Japanese currency is devaluing like crazy compared versus gold. It's like, wow, the currency has really, I mean, they stepped in and they bought 87% of ETFs. I just saw they bought a 13 in October, they bought $13 billion worth of bonds. They're manipulating markets.
Yeah.
That's why I think one of my favorite quotes in my movie is when the most underused books in finance are history books, because governments manipulate markets. And we're still, and yet people still, even with manipulated markets, and they're telling you they're manipulating, they're showing you they're manipulating, they're talking about it, people still believe markets are efficient. If they're manipulating, how can they be efficient? It doesn't.
Yeah,
Those are contrary. That's not. So I believe what's happened is stocks disconnected from fundamentals. And by the way, if anyone landed on the moon right now and looked at valuations, they'd say, why would I buy? I mean, let me ask you a question. You own Petrobras. So last year, Petrobras earned $40 billion, traded as low as 70 billion, I think it was something like that. If I asked 1,000 people, would you rather a company earns 40 billion, like Petrobras, or loses 40 billion, which is what Amazon lost last year? You'd have 1,000 people, maybe you'd have 999 say, I'll take the one that earns 40 billion, thank you. And that was a stupid question, Chris, right?
yeah.
But the markets are doing different.
Yeah.
The markets are trading 15 times as much for Amazon than they are for Petrobras. One earned 40 billion, one lost. Why? Because it's not people anymore. It's machines,
Yeah.
right? Ecosystem change. It's the biggest point in money game. The ecosystem of capitalism shifted to machines. Why? Because machines are easily manipulated. They're controlled.
Yeah.
They
So
Skynet.
Skynet has taken over. Is that what you're saying?
What's that?
Skynet has taken over.
Right. I mean, so it's all being controlled by factors.
Yeah.
Factors is modern asset management. By the way, we were using factors at Fidelity like crazy, right? So I would argue that if you just ignored factors, and you just looked, if you were looking for cash flow, right now you can real assets have never been cheaper. They're cheap as they've ever been. You can buy stocks at one. I mean, there's a company called Zim. Like, this is my belief. My belief is that markets don't read the news. Okay, Zim is a shipping company. You know that the Red Sea has been cut off, right? So the Houthis aren't allowing ships to go through the Red Sea. They're having to travel all the way around the Horn. Well, that's probably good for shipping rates, right? Zim traded as low as $1 billion. Over the last 2 years, Zim earned $5 billion in free cash flow per year. Okay, that's $10 billion in 2 years, and they paid all that in dividend. How could it trade as low as 1 billion? And now the shipping rates are going to be going up again.
Yeah, this is actually skyrocketing right now. I just looked at a number. They doubled. They're not nowhere near, of course, when the shutdown happened, but they're actually up like prior to, like, when the shutdown started to happen. They're at those levels, like quite substantially up.
Because shipping rates have gone up like crazy, and even though most of the market is still passive and quant, there's still some people that are reading the news. Not many, but the quants won't see it until the momentum picks up.
Yeah.
Then all of a sudden it'll go from 14 to back to 70, right? But you got to wait, because I don't believe. I mean, passive we know doesn't see it because they're passive, right? They're not reading the news. Quants only are looking for momentum, right? They're looking for revision changes and momentum, and I mean, so valuation's one of the 5 factors in a quant model, right? So yes, it looks cheap, but you need all the other things to start working before they all step in. The Reddit guys finally figured out how to trigger the stampede of algorithms. Just aggregate a bunch of buyers. All of a sudden, when the buyers hit, all of a sudden momentum picks up, then the stock will fly. But I don't think markets read the news anymore.
Yeah, which is pretty wild. Like that's kind of how things should work. So how do you think like we're gonna have like just a blow off top kind of stock market that just gonna skyrocket up and then like that'll be the end game kind of thing? With of
Yes.
course the currency going bust at the same time. Now, here's one thing. I studied currencies, and the hyperinflation events usually are events that are triggered by a shock, usually of inflation into the economy. So you get panic, a buying into that sector of the economy, which is usually goods and services, right? Mostly goods, real things. So people try to go out and buy food. And then so what ends up happening is that you get a massive move, which velocity of money, so like the amount of money that's starting to chase and then move around in that part of the economy goes up. And so prices goes from that shock to an even worse shock. And then people are like, well, now my wallet, like my actually what I have, as I get from salary is not cutting it. And so people start to try to buy more. And it's happening in Turkey. People just buy whatever they can as fast as they can. They find other things like currently they're buying US dollars and gold to, stop, the massive loss that comes out of the pocket. The government will come in and panic like they just did it in Turkey. Minimum wage went up 49%. In Venezuela at the time it was 5,000%. And so you get even more thrown at. And then at one point, there's a break that happens. It's the trust in the value of the currency. When that trust breaks, people stop then spending in that currency. They start to use alternatives. They start bartering in the economy. And what happens is that the government cannot get tax revenue anymore from their currency. So they have to start print, and that voila, you have a hyperinflation very quickly.
Correct.
That's
Well,
kind of what.
I think the shock you had. So I think that the day that the U.S. stole Russian reserves is going to go down in history as the equivalent of Bretton Woods. It's a shift it's a shift in a currency, right? So all of a sudden the entire globe went on notice and said, wait a second, you can steal my money at any point. All of a sudden Brazil starts saying, okay, I'm going to sell some dollars. The BRICS join up. Notice the BRICS are all joining up together, right? We just had Ethiopia, we had Egypt, I believe, the UAB, Saudi Arabia, all joined BRICS, right? You were asking about a shock. What's the shock? The shock is a removal of the petrodollar system, right? So notice that Saudi Arabia and UAE are now on the side of the BRICS. So the U.S. has been on the petrodollar system since 1973. All of a sudden, as of January 1, they're no longer in the petrodollar system. So that's one of the shocks that you might see, is that, and by the way, so now we're not on the petrodollar system. Now they're cutting off the Red Sea. The Houthis are cutting off the Red Sea. So it's going to be harder to ship oil from the Middle East into Europe. And so it seems like it's all playing out. That all of a sudden the BRICS are becoming bigger. By the way, the BRICS, there's been discussion about the BRICS tying their currency, having one main currency and tying it all to gold. Notice all the de-dollarization that's happening, right? The UAE and China and Saudi Arabia and China are all selling in yuan. They're not selling in dollars anymore. So that's all shifting, right? So I believe the day that they stole Russian reserves was the day that it set. I mean, think about every country on the planet has had a dispute with the U.S. Canada's had a dispute. Mexico's had a dispute. UK has had a dispute. China, India, Brazil. It doesn't matter. Every country has. But now they know that the U.S. can steal their reserves and will in a dispute. So if I were a central bank, I would say, get me away from dollars. And so that's what you're watching,
Yeah.
right? It's time. But the BRICS just expanded January 1. So here we are, right? So I believe we're about to see hyperinflation. I believe we're about to see it in the US. It comes down to the second biggest quote in my entire movie. Von Habenstein, the head of the central bank in Germany, had a choice: print the money or trigger the revolution. And that's where we are. We're at that moment. What I say is money game will timestamp the biggest currency shift in history.
Yeah.
And that's what I think we're watching.
My question on top of that, like I have a little bit of a different theory going that also you're gonna see all the other currencies, they're going bust now. Like look at China, they're in massive debt problems. Like I'm watching both Germany and Sweden, the powerhouses of manufacturing in Europe. They're like Sweden just came out. We have like massive bankruptcies just starting to skyrocket, and I think it's a lack of dollars that they can't get a part of the system as well. They're having the same massive debt. Like last time in 2008, we had housing bubble in the US, creating massive chaos. Now we got private debt bubbles all across the world. Not all countries have the actual like public debt bubbles, but most have. And so yeah, it's definitely the end, and I think everybody's ending at the same time. But it's do you think that the BRICS is able to save themselves? I guess they're like a lot of them are commodity rich economies, right?
They're
And
all commodities.
I believe that commodities are going to be the powerhouse that's we're gonna start coming back to what you're talking about in your movie is that real things are going to see real values again. And it happens during these shocks where people find out how actually valuable real resources are. It's like when people in the cities start to find out how important it is to feed themselves. They think that the food comes from somewhere, right? But when they actually finally understands that it comes from the countryside, actually there's another crisis building here, and it's in the farming sectors. Like the average farmer, I talked to a North American farmer journalist, and he was telling me how basically the average farmer around in North America is about 65 years old, and we're gonna need to do something there. We as humans, we could trade as much as we want and do all these things in the financial markets, but if we can't feed ourselves, we kind of screwed. So, um, I think there's going to be a huge inrush into commodities. I wrote a book back in 2015 where I predicted in Canada we're going to see a shift from the here we have the west and east side of the country. In the middle, we have most of the commodities. It's the farming, the mining is going on here. Like I live in the middle of Canada and Manitoba, and we have a lot of farming. One of the biggest problems with our economy is we actually have a huge portion of it is finance and government. And so that has to go. But other than that, I think we're going to see a massive shift to actually people realizing that the free market is more powerful than we think it is. It will win eventually. It just takes some time for these manipulated numbers and markets to suddenly figure out it's like, oh shit, we've been on the wrong, valuation scale here. We got to change, or else like society goes down with their, belief that you can just pump this up.
So two things. China used cheap money to build 100 cities the size of San Francisco. Right. So how'd they do it? They were using cheap money to take themselves from $1,000 GDP per capita to whatever it is, 14,000 today. Right. They built 100 cities the size of San Francisco where nobody lives. They have the ghost cities.
Yeah.
Right. So they use this cheap financing to build cities, and they went from having none of the biggest ports to 9 of the biggest ports in the world. Okay, so they use cheap money to modernize their entire infrastructure.
That is very, very true. Huge point. Yeah,
where we used our money to buy BMWs and Canadian Goose, right? Consume.
Yeah.
Right. So and I say that Canadian Goose because you're Canadian.
Yeah.
But we used all this cheap money to consume.
Yeah.
Now they have all the biggest ports, the biggest railroads, modern infrastructure, all that. The other point I would make: why do we think that Russia invaded Ukraine? Because Ukraine is 4 times as big as the American Midwest in terms of food. right?
Oh no, it's
So
the breadbasket of Europe. They used to own it. The Soviets killed a whole bunch of people there to do farming back in the day.
right. So that's so
Yeah.
they're taking over. They didn't choose it randomly. They chose it because it has natural resources, right? They have uranium. They have the breadbasket of Europe. They just have a lot of natural resources. So that's why they take over that. By the way, there's a lot of risk now, if that gets cut off, to food going to Africa, because there's not enough. They're struggling with food.
The Arab Spring was done by high wheat prices.
Correct. The same thing's happening.
Yeah, and talking about resources, let's look at this, because what's happening in Gaza, there's like huge oil resources out in the Mediterranean there, and then there's another crisis developing off of offshore of Venezuela, because
Correct.
Guyana has been having huge success in building oil revenue. They've had the big companies coming in there, and then their GDP has just skyrocketed insanely, and so now the failed state is coming in and wanting some of the oil revenue. That's kind of, so you're seeing it's funny when we look at these things. Like also another big thing is AI, and the chip itself, is very important in that. Like the actual physical commodity. We're not talking about stupid companies that
Right.
go through the roof. The actual chip itself, well, it's mostly produced on the Taiwan Peninsula. And what is Xi Jinping saying? He just came out with a speech. It's like, yeah, Taiwan is ours. It's Chinese Taipei. You get it, guys?
I
So
mean,
yeah,
we have four hotspots. All of a sudden, we have four hotspots,
yeah,
right? We have Ukraine, Russia. We have Gaza. We have Guyana, where there's where Venezuela sending troops and Brazil sending troops. There's 11 million barrels of oil in Guyana off
yeah,
the coast, run by Hess and Exxon, right? So now all of a sudden they're saying we want that, and we're going to take them over, and now we have that at some point China is going to try to take over Taiwan. Like, it's just a matter of time. So we have all these hot spots happening at the same time. The world's changing, right?
yeah,
It's changing before our eyes, and yet people still believe markets are efficient. And it's. I mean, notice what China is doing. They're buying real assets. They're buying copper companies. They're buying gold companies. They're buying silver companies.
oh, they
They're
bought them here in Canada. We've seen
well,
a few purchases here
well,
just locally even.
they're also at one point they were storing the world was storing their reserves in U.S. Treasury dollars, right? That's what the U.S. is the global reserve currency, right? So they were storing their reserve their money in U.S. dollars until they realized that the U.S. and the G7 can't pay real rates. Now what you're seeing China do is rather than storing it there, they're locking up LNG contracts for 15 years. They're locking up oil assets. So rather than storing it in U.S. Treasuries, which will lose money every year, why would you ever buy a bond with a negative yield from a country that's monetizing its debt? And that's
Yeah,
what they're saying. They're saying, okay, I'm not going to do that. I'm going to buy oil. I'm going to buy. Just watch what they do, not what they say.
that's true.
China is
Again,
selling their dollar reserves. The world is selling their dollar reserves. They're buying real assets, right? Um, I find it interesting that take a look at nickel prices. Remember, nickel prices exploded to like 50,000 a day because there was some short squeeze or something that happened.
yeah,
Notice that nickel prices have all gone down to 16,000 from 50, right? Why? Like, Russia got taken off the market. Russia's 50% of production in nickel.
yeah. Oh no,
So
I used to be in the military up on the Russian-Norwegian border, and the biggest nickel factory, actually in nickel, which the company is Norlisk that runs nickel up there on the
right,
border, and that's the biggest producing nickel mine in the world, up
right.
close to Norway.
So if they came on offline, all of a sudden the price spiked, and then it came all the way back down.
Yeah,
I thought Russia was offline. Is that price real? Like, I posted at one point, there were in LME, the London Metals Exchange, there was they found a bunch of not nickel, but they found rocks that they thought were nickel. They were bags of rocks that at the London Metal Exchange. Okay, wait a sec. Are we running out of scarce resources? Are these prices correct? Are they manipulating nickel prices? Like that's the one I look at and I go, wait a second. The price spiked and it came all the way back down. Are
yeah.
they? controlling prices because they're trying to punish Russia somehow. By the way, Russia also started selling their natural gas to China for half the U.S. dollar price of what they were getting in the West, but they were selling it in gold. Wait a sec, is the gold? Would they really sell something for half price, or are they getting? Or is the gold price miscalculated somehow?
Yeah.
Right. So are they really getting a good price because they're getting gold now? They're not getting dollars. And are prices disconnected from reality?
10,000% they are, yes.
I think so too. Right. So I think they're manipulating bond prices, gold prices, silver prices, nickel prices. Everything's been priced. Oil was priced in dollars. 100% of all oil was priced in dollars, right? Anytime over the last 40 years, a country came out and said, we're not going to price in oil anymore. Saddam Hussein, he's dead, right? Anyone that did all this stuff, okay, you're dead.
Yeah,
right?
Gaddafi, he's like, we're going to have a gold-backed currency over in Africa. That didn't go so well.
That didn't work out for you, right? Yeah. Because yes, you will price it in dollars or you'll be dead.
Yeah.
Right. So you see it everywhere. So do we believe that these prices are correct? I don't believe. I think stocks are. I think asset prices are disconnected from fundamentals. One of the quotes I have from Money Game: the Fed's supposed to be like a referee in a football game. No one's supposed to notice them, but now they flipped the field 90 degrees and broke the scoreboard. I believe the scoreboard's broken.
Yeah, and to your point of like, I'm looking at commodity prices, right? And I'm looking at what is priced in what currency. And actually, there's a few. If people don't pay attention, there's the methanol. You got steel, no lithium. These are actually in Chinese yuan. And then you got palm oil is in the I don't know what that currency is, but it's not the US dollar. Let's see what else we got going there. I think like a lot of the industrial metals are actually, here we go. A lot of the here we go, polyethylene, polyvinyl, polypropylene, sodium ash, neodymium, tellurium, like all of those are priced, and magnesium is priced in Chinese yuan. Like that's the price mechanism. So it seems like they're slowly like taking over. So looking at that point, because you got the dollar bulls, the people that believe that the US dollar is the world reserve currency. Everybody will flood to bonds because it's the safety net of the world. What do you got to say to those guys that believe that the dollar is going to save the day? It's going to be there. All these other currencies and economies are going to go bust. What do you think? Like, because we were kind of putting to a point where nobody else have really like talked about that point of consumption versus actually creating something of real value, infrastructure, and they're buying assets that are real. To the point of the dollar, bulls that believe that the dollar is the end all be all, there's going to be nowhere else. What do you got to say to those guys? Because I feel like there's a huge disconnect. And I used to say to bankers, they're saying like, oh, if you have a bankrupt, if I go and take my cash, you're going to be bankrupt pretty quickly. It's like, no, we're going to sell our bonds. And look at how well that ended up for SVB and others, right? Do you think that there's going to be a huge collapse in trust, and then the real value of all this debt out there is going to come to the conclusion of be like, well, maybe it's just worthless. Like maybe it's worth very little.
I think you're already seeing it. In macro, when you see big changes in rules that normally used to work but no longer work, you have to say, okay, what's going on? It used to be that when the stock market went up, the bond market would go down, and if the bond market went up, the stock market would go down, right? So one would work as risk on, one would work as risk off. When you start seeing both of them being risk on, when you start seeing the bond market trade like Dogecoin, because I saw that there was the 1 year, or what I think it was a 1 month bond, the interest rate went up 13% in a day.
Yeah, we did. I just saw that being posted by someone, who shared it too. Yeah. Yeah,
Correct.
that's pretty wild. And actually, one of my banker friends, he said that yeah, that means that there's a potential failure out there that nobody's
Correct.
talking about.
There's dysfunction in the bond market. So the bond market is now acting as if it's risk on,
Yeah,
right? It's trading with the stock market. So both are trading. It used to be they'd reverse, right? One would be strong, the other one would be weak. But now
yeah,
they're acting as if they're both risk on. Why? Because you're in a sovereign debt crisis, right? So it looks like Argentina, it looks like Venezuela, it looks like all of a sudden the rules have changed, and this is pretty recent, right? This is just recently, all of a sudden, that they're both acting. Bonds are acting as risk on. By the way, what's the one that's acting like a risk off? Gold.
yeah,
Gold price is going up.
yeah.
Right. So compare the gold price versus the 30-year Treasury bond, the TLT. Right. All of a sudden, the gold price is crushing TLT over the last year. Right. So you're seeing changes in macro, and when you see those changes in macro, things that used to happen, the rules that used to happen aren't happening anymore. I would argue that we're in a sovereign debt crisis. And that's honestly why I made the movie, because during a sovereign debt crisis, they're going to have to print the money or trigger the revolution. Markets will have dysfunction, and every single time in a fiat currency, for market dysfunction, they're going to have a choice between picking the bond market and banks, or the people, inflation.
Yeah.
They're going to choose. They're going to choose to save the banks and cause inflation every single time. And that's why I could make this movie 2 years in advance, of all the events happening. But now you're seeing the events play out. You're seeing it play out in Argentina, and that's not going to be the last one. It's going to continue
Oh
to
no,
happen.
Canada is like where I'm at. It's beyond right. Like it makes the United States look like nothing. Like our bubble here, it's pretty wild. Like it just blows my. When I wrote my book, Canada, the greatest economy in the world, question mark, because everybody was talking about how great it was. I did point out the massive private bubble at the time, and then of course since that time, the government has over doubled their debt. They went from about 800 trillion up to 2.3 trillion. Well, the government is stating, actually, this is interesting. The government is actually stating 1.3 trillion, but the real debt is 2.3 trillion because they're not accounting for the crown corporations, the GSEs, as they're called in the United States.
But
So,
if you shift your lens from it's a bubble starts with the assumption that markets are efficient, or it starts with the assumption that you're living in capitalism.
yeah, okay, yeah.
So
Yeah.
now think of this system as not an investing system, but as a financing system.
Mm-hmm.
Okay, so now if Tesla trades at $800 billion and loses money, does it make sense? No,
No,
it
it
makes
does.
sense.
Yeah.
Well,
Yeah, it makes sense that way. Yeah.
prices don't make sense.
No.
But rather than believing you're living in capitalism, understand that you're living in a centrally planned economy that's providing financing.
Yeah.
Now trading at infinite makes sense,
Yeah. Yeah, exactly.
right? Because it's a financing system. It's not an investing system, right? And and why is it financing system? Because the dollar is the global reserve currency. So when the dollar prints, when they print money, and without if they print money and the dollar doesn't decline, then you actually have added value. You've actually you've created wealth.
Yeah.
Until the dollar isn't the global reserve currency anymore. Until the rest of the world says, we're not buying this bonds, we're not going to buy your negative yielding bonds anymore.
Mm-hmm.
Then the system collapses. Right? It was never a capitalist society. It was a financing system. Right? And so when you look at it as Nvidia, perfect example. Stock, the revenues decline 8%. Stock explodes higher. Why? Because it's not the market predicting it. It's factors. They're hitting on some factors that the price is flying like crazy. Then the narrative builds, well, it's because of AI. But wait a sec, last quarter they declined.
Yeah.
So now the company goes to $1 billion. They sell 10% of their shares, and now they have $100 billion in cash on their balance sheet, real cash that's really worth something that they can now build their plants with. It's a financing system. The same thing happened with they're making their money. Not so same thing happened with GameStop. Stock was trading at 275 million. Then it goes to 20 billion. Right? So then they sell shares, and all of a sudden they really do have $2 billion on their balance sheet.
Yeah.
right? So it's not an investing system, it's a financing system. By the way, those that tell you that that was a short squeeze, that was 3 years ago, and GameStop still trades at 10 billion. Where were the sellers? There are no sellers because it's all passive. There are no sellers in passive. It's a financing system, right? So once you shift your lens to it's a bubble to it's a financing system, everything makes sense again.
No, 100%. Yeah, it actually does. Yeah, yeah, very, very fascinating. Like it's interesting to see like how, people like, and I watch this all the time where people still, use the term free market or anything. But in my view, and I want to hear if you agree with this, a free market means that it's free, unfettered, and also the term capitalism comes in with the free market because it means that there's no intervention at all. Like we're free,
Correct.
to
Correct.
trade and find prices for everything. And there's nobody's saying that, oh, we're gonna come in there and we're gonna subsidize, or they're gonna come in and be like, oh, we're gonna bail you out because you did a very bad trade. No, there's none of that. There's no safety nets. But actually, what ends up happening is you get a very much happier society with that. You're going to get less poverty because you don't distort the whole economy and completely destroys everything because of, we're not in a real system, like we're in a central plant system. And so, yeah, go ahead.
So look what happens. Look what the big companies or the big billionaires like Bill Gates are doing, right? He's taking his so when interest rates went to negative, his company went to infinite, right? I mean, I'm sorry, Microsoft trades like 45 times free cash flow. Okay, you're never gonna get your money back. Okay, fine. So what's he doing? He's taking money and he's buying farmland.
Yeah.
So he's the biggest owner of farmland. So what you've done by controlling interest rates, you've sent all the money to the rich at the expense of the poor through inflation.
Yeah.
And they're using that money to send up the prices of food and send up the prices of real estate. Blackstone is buying all the real estate around, right? So when you distort the system, it's benefiting the rich at the expense of the poor through inflation. That's not capitalism. The Fed is supposed to be like a referee in a football game. No one's supposed to notice them. But now they flipped the field and broke the scoreboard. They're handing all the money to the rich at the expense of the poor. Capitalism benefits everyone. This system is only benefiting the rich.
Yeah.
That means it's not capitalism. It's central planning. It's a centrally planned economy. They're manipulating interest rates.
Yeah, it's welfare for the ultra rich, basically, and then welfare for the poor through the whatever programs they get. But anyways, it's very interesting to watch this unravel. Like, so let's say, like, how do you see, like, what could be the triggers here? If you take a look at the economy, what could be the real triggers that you see that would really trigger the big downfall? Like, let's look, because it's probably going to happen quite soon. Like, it's so many problems everywhere. And so what do you think is going to be some of the triggers that's going to be like kind of the ball is rolling already. We've seen triggers, like we got the BTFP just keeps on going up, and there's no end in sight of the need to prop up the system. So what's going to be the major cause? Like, is it going to be a point where the government and the Fed is going to be like, okay, we're done. We lost. Like they can actually declare defeat. But I think I know what the defeat will look like. But what do you think?
So notice the Fed has they say they have two mandates, right? Price control, or price and stable prices and low inflation. I'm sorry, low unemployment, right? But they actually have three, right? The third one, the third mandate is a functioning bond market, right? So what's the trigger? This markets stop functioning. The bond market stops functioning. Every time the bond market starts functioning, they step in.
Yeah,
it's not one of their mandates. But so what will trigger them? $8 trillion in bonds coming due over the next year that they have to finance. Right? They're going to have to step in. Right? They're going to. It's functioning of the bond market. By the way, the function we've seen this for years now. The market stopped. This is what got me to write my white paper in 2019, called the $340 trillion problem. Remember the repo market spiked to
2019 September 17th
in a day. right? If interest rates in short-term bonds, forget about long-term bonds because there's no demand there. That's because there's no one's buying those. Short-term bonds spiked to 10%. If interest rates went from 1% to 10%, just do the math on the money game. The value of $1 paid annually goes from $100, 1 divided by 1%, to $10, 1 divided by 10%.
Yeah.
The market would fall 90% in a day. They couldn't have that happen, right? So they had to print. They had to step in those markets. So here we are again. Now things just get bigger, and the bubble keeps getting bigger and bigger and bigger. At some point, they're going to have to step in to protect their financing system.
Yeah.
Right. So what had the end game of this whole thing is, I think Larry Lindsay said, it always ends this way. Rome, the Ming Dynasty, always ends this way. The amount that the government has to spend, they can't meet expectations anymore, so they have to print money. So Larry Lindsay said that, I think, in 2015. Right? It always ends this way. They're going to have to print money at some point. So what's the thing? I think it's going to happen within the next year. Again, I think money game will timestamp the biggest currency shift in history, away from the dollar and the G7 reserve currency, which represent, I don't know, 95% of all reserve currencies, to something else, which is, and I don't know what it's going to be, but I think there's a good chance it becomes gold. That's what the BRICS are shifting to. Right, they're exchanging everything in gold. They're selling oil for gold, and so you look at the gold to oil ratio, and you should be looking at how those match up. Is the gold to oil ratio going up, or is it going down? But I think the world is shifting away from dollars as the global reserve currency to something else, and I think it could be gold.
Yeah, do you think they'll panic? Like, here's another one of my theories, that they'll panic into and try to keep their system alive, but then going into the central bank digital currencies, like actually taking the dollar digital, so they think they can control it, by
Right.
But it's been shown pretty clearly around the world, like Nigeria. I studied the CBDC, like in Ecuador, actually the currency didn't even go into fruition because nobody wanted to adopt it. They're trying everywhere. Like now you got the digital euro. Do you think that they'll try to enforce, like they go? I have a feeling, I always talk about a pendulum that swings from decentralization, free markets, over to centralization, complete centralization that we have now. Do you think that we'll try to push the needle anymore, or have we kind of, like, are we like, is there a totalitarian leader coming to the United States? Like more like the old Caesars, where they're or like what happened after the Weimar Republic? You remember who got into power then? Do you think that there's a risk for that? Yeah. Do you think
that's why I made Money Game, right? Because I know how the movie ends.
Yeah.
Right. The movie ends with my coffee going from $3 to $30. Everyone blamed the capitalists.
Yeah, which happens a lot. Yeah, we hear that.
But they're not. The capitalists aren't to blame, because the oil. It's the government that drove the price from $3 to $30. It's not the capitalists.
Yeah.
This isn't a capitalist society, but they're gonna blame the capitalists and turn to an authoritarian leader like Hitler to them. And that's how the movie ends. What I wanted to do is I wanted to change the ending. I wanted them to blame the central planners and return to capitalism.
Yeah. No, it's that's what needs to happen, and that's why I'm here too. Is I want to change that ending of the constant cycle of going full totalitarian at the end of the cycle, instead of maybe we just swing back before that happens. That'd be very lovely. But it's going to be in
the movie we have the Professor Gardner saying von Havenstein had the choice. Print the money or trigger the revolution. And what he says right before that, he's talking about Germany. And he says, what drove Hitler to power? And he circles the word on the chalkboard: inflation.
Yeah. And look at, like, I have a $10 billion Reichsmark here. And it was so bad.
You're a billionaire?
Sorry?
You're a billionaire?
Oh, well, wait, it's kind of worthless. I bought it for like $200.
Just kidding. You're a Zimbabwe billionaire.
Or quadrillionaire. I think a lot of people became quadrillionaires down there. It's funny when we hear all this, like, oh, there's a massive growth in millionaires, or now we're going to soon see the first trillionaire. It's like people don't think what actually is behind it. Is that because they created more value, or they use that financial system, as you said, to just create more units?
It's
we're
completely
in
broken.
we're in deep problems, and so you foresee basically the collapse in the trust of the system, and then they're just going to be forced to do what they've done throughout history. Like my rumor is ridden with hyperinflations, by the way, and I love to collect those things. I have like 30 different ones that I collect, and I really studied that, and it seems like everybody's like, oh, that could be changed, you know, like but I think like we got to repeat it every single time. Which
You
just
have to.
it's just, yeah, you just have to, the system is built that way and you can't get out of it.
No one's going to believe you,
Yeah.
right? So it's happened, as you know, it's happened every single currency in history
Yeah.
that's
Yeah.
backed by nothing. It's gone to zero, but they're never going to believe it's going to happen to them. Is what it is. Happens every single time. But by the way, notice 87% of global markets are G7,
Yeah.
right? 87%. Like, why? Because they're the global reserve currency. They can print money without causing inflation, and that's
Yeah.
been true forever, until they can't. And the rest of the world's starting to say, wait a second. They're looking at the valuations in the U.S. That don't make sense. 30% of the companies that are zombie corps,
Yeah.
and they're basically saying, let's get off of this system. I mean, think about it. You're giving away your sovereignty. If Amazon wants to go buy Alibaba, Amazon trades at 10x what Alibaba does. Their revenues are probably the same, right? But one trades at 10x the other one. If they can just offer them shares, they can buy every company. If Tesla wants to go buy a Toyota, they can.
Well, look at what
If
Japan did back in the 80s. That happened.
correct,
Yeah.
if you financialize your economy, if you allow one country to be the global reserve currency, and the G7 to be global reserve currency, you're basically giving away your sovereignty, because those companies, Tesla can buy every auto company in the world. Walmart can buy every retailer in the world, right? Pfizer can buy every drug company in the world, right? So if you allow one country to trade at infinite, you're allowing you're giving away your sovereignty, because they can buy every company.
Yeah.
That's what you're watching. Exxon can go buy Petrobras, right? Because Exxon trades at 12 times earnings. By the way, it's cheap. And Petrobras trades at 3 times earnings. Just
Yeah.
go buy it. I mean, the reality is those countries aren't going to allow their Petrobras to get bought or
No.
Toyota to get bought. But all I'm saying is that if the system is so distorted, then every other country is giving away their sovereignty to you until they get off the dollar.
Yeah.
Because they can buy every single company, which, by the way, is what's happening. It's what you're watching.
Yeah.
Right. So you can't, and that's why all these other countries are saying, I need to get away from this, because it's not a fair system. The Fed has broken the scoreboard.
Yeah.
This isn't a real system anymore. Right. The amazing thing is that finance professionals have been so gaslighted for so many years that they believe 2 + 2 is 4,600, like whatever it is, like it's, nobody uses math anymore.
Yeah.
If you dropped in from Mars and said, listen, I want you to pay $1.6 trillion for Amazon, which, by the way, is a post office, and loses money,
Yeah.
you'd laugh at me. But the market's doing it. Why? Because it's not people anymore. It's machines.
Yeah.
And why did the machines win? Because they have no morals. Humans got run over, right? There's no humans left in markets to set prices. So now the entire system is just machines. A bunch of
Yeah.
followers following, cat chasing its tail, right? So it's just there's no math being applied to these anymore. Everyone's using price. And they use price with the assumption that someone else is valuing it, right? I mean, think of quants. I mean, the whole premise of a quant is that someone else is buying it. It's got momentum. It's got to be someone thinks it's really good, but there's no active managers. It's a bunch of followers following followers. And now the entire system is just misallocating resources. We're pouring trillions of dollars into Dogecoin, GameStop, Tesla, money losing companies, which then slows the real economy, which is the biggest point, which we never say. We show it, we don't say it in Money Game. They go to a restaurant. It's a mom and pop, right? It's during COVID. During COVID, we know that a lot of mom and pops closed down because they didn't have any financing and there was no business. They closed.
Right.
Right next door, there's a Shake Shack and there's nobody in there, but the stock's doubling. It's an unfair playing field now. The corporates have a huge advantage over mom and pops. So it's not just the rest of the world in the US. It's even within the US, the 99% in the US don't have a chance versus the corporates, because the corporates have all the financing. So mom and pops are closing, and it's not a level playing field anymore. It's not capitalism. A return to capitalism, the entire economy would boom higher, because we'd create competition. Right? There's more competition. Everything would get better. Right? The money would matriculate down to the average person.
Yeah, no, you have full centralization, and the outcome of full centralization over time, as like we've completely moved away from a free market, will be monopolies. Like they're like the further down the line you go, and the mergers and acquisitions is going to go back to the Rockefeller of the like in the 20s, where he had accumulated all the power. All right, and so that's what we're at again. Like what people don't understand is that the monetary system failed back then, and that's where we're heading right again. It's
if the system fails, the economy will boom.
Oh yeah, no, the real economy will it. Yeah,
the real economy is right now.
Yeah, it'll suck for a little bit, like that. Yeah, and that's what's his name, Milei is doing in Argentina. So like it'll suck for just a little bit here, but just wait and see. Like actually trust the market, trust yourself. Like it's time for you to take back the own power of your individual responsibility to make this place that we live on a good place again, and actually interact with each other again, and not letting the system that's completely taken over and distorted everything. When you do that, you're gonna have tremendous success when it's over. Everybody's so afraid, right, for us letting the system go bust, because especially the PhDs, because they base their whole life on it. But then they've been telling this story that, oh, it's going to be horrendous if we let JP Morgan or anybody else go down. But in reality, it actually will be hugely beneficial for society, because we've been playing this game, like really heavily playing this game, since 2008. That's really when the system should have gone. It should have been gone. It should have collapsed, but no, they chose to double and triple down. And so people just got to keep on getting poorer, as you say. It's going to be more and more miserable the further you try to do this. But at one point, it's completely broken. You can't fix it at all.
So two things. You just hit on the biggest line in my entire movie. Correct. 2008, when the Fed intervened in bond markets, they broke the ecosystem of capitalism. That's the biggest line in the entire movie, right? So the other thing, the closing quote in the movie, every character has to have an arc, right? So Professor Gardner starts out as a community college professor where no one's listening to him, right? He's telling you my coffee's worth infinite. He ends up running the Money Game podcast with his millions of listeners, right? And this is the final thing in the movie. Our system's broken. It's clear now that money printing sends asset prices up. What's less clear is it also slows the real economy as we misallocate resources. Now we have two different economies, the financial economy and the real economy, that no longer work together. Money printing doesn't create wealth. Wealth is created by all of your hard work.
Labor. That's it. When we do something with ourselves and we take things around us and make something, that's what creates real things. And that's the true economy.
One thing I would say about Milei, he's going from the frying pan into the fire.
Yeah,
because he's getting rid of the Argentine currency, and he's linking it to the dollar. What? Yeah. Link it to gold.
You're actually,
it to 130. Like, what are you doing? Like, why would you link it to the dollar?
But I do like he did also another move that is not talked so much. He also opened up for people to use whatever they want for medium of exchange. So it's like actual top-down legal tender law. Be like, oh, now we're going to use the dollar. That's it. He actually opened up for people to get paid in different things, like even as much as milk and whatever they can, because he knows that that's real. He knows that actually has some real forms of value to people. But yeah, again, like a move to the dollar is not the way to go. Yeah, it's the world reserve currency, but as you kind of described here, for the people that believe that the US dollar is the end all be all and it's going to be this powerful entity that everybody else is going to go way before them. But it's also what's backing that, right? Like that's what's so important that you're trying to mention here. It's like what's actually behind that dollar? Like what is the real thing behind it? Because they created this fake entity that's the financialized economy. And so everybody thinks that, oh, that's what's behind it. All these financing, that's what's, really the dollar. When we really like the dollar should really be what's behind the US economy. Like, what do you guys have? what can you guys do? And
I agree.
yeah.
And I think 24 is a very important year because it's going to be very hard. China's not. Look at the biggest buyers of treasuries. So all of a sudden we need $8 trillion to be repurchased, right? Who are the biggest buyers? Japan. Okay, well, they're defending the yen.
Yeah.
The UK, they're defending the pound. Yuan, they're not buying US dollars. They might even actually go invade Taiwan. They're gonna buy US dollars. And who's the fourth biggest buyer? Banks. Right? The banks were buying, the US banks were being forced to buy US treasuries. Well, but here's the problem. The US treasuries are yielding 4% right now. Deposits are yielding probably 2%. So what's happening is this kind of a run on the banks. Because people are saying, well, why would I leave it in the bank and make 2% when I can make 4% on a US Treasury? I'm just going to put it in US Treasuries. So what they're doing is they're crowding out their own banking system, right? That's why they also had to lower interest rates, because there was a run on the banks, right? So, and by the way, the banks need to buy bonds. So there's your 4 biggest buyers. Who is going to buy the treasuries over the next 4 quarters? Money Game will timestamp the biggest currency shift in history. It's going to have to be the Fed. The Fed is the buyer of last resort. They're going to have to buy everyone. They're in a hotel California. They could check in. They can never check out. They're going to end up buying all of these bonds.
Yeah, I said before, there's no exit strategy.
It's the end of the system, right? Until the rest of the world says, well, why am I buying a bond if you can't pay me negative rates, why would I buy your bond? I'm just going to buy LNG, oil, copper, right? That's why you're seeing all these countries in the world buying natural resources rather than storing their money in bonds. They're storing it in LNG and real assets. Do what they say. Do what they do, not what they say. They're all watch how the rest of the world is acting. They're selling US treasuries, they're buying real assets. That's just how it is. And by the way, you can buy real assets at 1, 2, 3 times earnings in a world where you got to pay 20 times revenue for Uber and Snapchat and Tap It, for that matter, from Money Game. And that's why we made the movie, to show that the entire system is broken. And that's the message we're trying to deliver.
Yeah, I just recently interviewed a guy. His name is David Webb. I don't know if you're familiar with the Great Taking. Have you looked into that? What's your thoughts on that actually? Since you're in the markets, and what do you see? Like, do you think that they're gonna try to like pull something like that and take your what do you think?
So I follow a guy named Luke Gromen. I think Luke Gromen is one of the best economists out there. It's Forest Through the Trees. He commented on this recently. He basically said I believe Dave Webb. He lives in Sweden, but he's from Ohio, which is, by the way, where Luke Gromen's from. What he said is he knows of David Webb. He doesn't know him personally, but he knows of him. He knows he's a real guy. He says he probably has done his research. His research is basically into the legal aspects of who owns what, and he's basically saying that at the end of the day, the derivative market owns stocks, not you. You don't own actual stocks. You own derivatives of stocks, and if at one point they want to take them, they can from you, and they can do it legally. As backing to back the entire system. At one point, we all know the system was all being backed by oil in the petrodollar. We're not on the petrodollar system anymore. Do I know all the legal aspects? I don't. I'm not a legal expert in like that. But what I would say is what Luke Gromen says is that he's a real guy. He's done his research. Do I know? Does he know? Luke doesn't know either. But it's just a lot of legal stuff there.
Yeah, it's interesting. I did look into it a bit. I actually used ChatGPT to find all these laws that he was talking about, and there's actually some meat to the bone. There's like I looked at I don't know if you're familiar with the Financial Stability Board and the GSIB list that they put out.
Okay.
who's going to get bailed out. I don't know if have you seen that list, like the
No.
globally systemically important bank list. It's being put by actually. I've read a book. This is like 6 years ago almost. It was called the redesign of the global financial architecture, the return of state authority. And it was written by a guy called Stuart P. McIntosh. He used to work at the organization called UMFIF, which is another academic think tank organization. But
Right.
basically, he's writing about he wrote about in that book the Financial Stability Board, and he said instead of the IMF that we have running the show now, you have the FSB is only 20 guys that are setting all the laws in accounting and legal. They wrote the bail-in laws and then got it implemented. They used the G20 countries, the G7, the power of that, right? But you believe that they're going to fail. So, like, I think they're going to try to do something. But again, like in the United States, how are they going to even pull that off without taking everybody's guts?
I mean, it caused a massive revolution, obviously.
Yeah,
But
and it's funny how they just recently put out there's two movies that just came out, talking about movies. There's Leave the World Behind, that Obama just put out, where there's an EMP attack on everybody basically that hates the United States, the ones that we talked about. EMPs the United States and the United States is decapitated. There's a movie about that, and then there's another movie that just came out, coming out now in April called Civil War. It's
right, I
like
saw that.
and
I
it
saw that.
basically talks about what could end up happening if we don't return to a market again. Because when you distort things, as you said, you got to turn to the very, very dark places, at the end game of
Right.
it. And so I think what you're doing is hugely, hugely important. And if there's people that watch this that wants to help and wants to get your the everything out and show it to people, make sure that as many people can see it as possible, is there a way that they could help you financially, or if they could help you just by their own help and connections that they have, maybe maybe if you can go into that, how people can help you and
100%. So financially, we're all set. We made the movie. We did it under budget. We're good. But I would definitely say is so we should have the trailer out within 6 weeks. And when I post the trailer, I'd love people to repost it. And just if you want to return to capitalism, then spread the word that Money Game's out. It's a great movie. It's interesting. By the way, it's an emotional roller coaster. I actually think people are going to love this movie. Some people are going to see the financial aspect. Some people are just going to see a movie. They're going to see a guy that they love, that's struggling to make ends meet, that plays basketball with this other guy who's the CEO of the next big thing, who's making billions on his app. We make all the points. We don't belabor the points. At the end of the day, you're going to have tears. You're going to feel. I mean, it's a widowed father of two, right? This isn't a financial movie. I mean, it is, but it's at the end of the day, every movie has to be a story about a guy. This is a guy who's struggling to make ends meet. His wife died. He hiked the Appalachian Trail. He loves Maine. He's got two kids. He's struggling. He plays basketball with this guy who's making billions, and he starts to say, "Hey, wait a sec. This guy's making billions. How's he making so much billions? I'm going to take a course in finance." Where he meets Professor Gardner. Professor Gardner basically tells him buy real assets. They've never been cheaper, right? He basically talks about the money game, the financialization of the economy, right? And he says buy real assets. I won't tell you the ending of the story, but I'll tell you what I will tell you is, as you know, with every story, the main guy wins and the other guy doesn't, right? So it is what it is. So all I would say is retweet it out. Send if you want to return to capitalism, which I believe a return to capitalism. Price discovery. We just want price discovery. Why are the PhDs so afraid of price discovery? Let it happen. Level the playing field. Make this a system where everyone can win. Capitalism benefits everyone. It doesn't just benefit the top 1%. You're watching all the money is flowing to the rich at the expense of the poor through inflation. If you want to change it, go see Money Game, retweet it out, talk about it, just spread the word that we have a massive movie, and hopefully we can. I mean, hopefully we find a great distributor. That's the other thing. If anyone knows a distributor that would love to distribute this, we can give you a percentage of the movie, right? A massive percentage of the movie. If we have a distributor that's out there would love to see this movie and wants to distribute it and believes we have a message, we can send you the movie, right? So you can see it. So if that's where we are at this point in terms of if we can find a great distributor like Sound of Freedom, like Angel Studios.
Look what they did, yeah.
They made $180 million movie. Our movie is a very quality movie. When we shot it, we by the way, we had the film crew from Coda shot the movie. When we finished shooting the movie, they said it looks like a $7 to $10 million budget, which by the way, it's not. But it looks like that. And by the way, I've seen the movie. We have real music in it. We have real great actors. I'm just very proud of the movie. Now our final step is to distribute it. So if anyone knows anyone that can help us distribute it, great. Otherwise, you can just spread the word as we send the our trailers out there and just talk about it.
Yeah, that's fantastic. It's exciting. I've been excited about your movie for a while now, and I can't wait to see it come out into fruition, into the real world, and being shown to the people that needs to see it, because if they don't see it, it could be very dark times there, and we need to try to do our part as to put out as brighten as many minds as possible to try to
100%.
slowly revert.
And by the way, the good guy wins, right? So that's what you wanted to see in the movie. So at the end of the movie, everyone should walk away with a feeling like, wow, that was a really good movie. That was fun to watch. It's a positive movie. It's a positive ending. It's a positive beginning, right? It's just a struggling guy. It's kind of like Rocky, right? The Rocky wins at the end, just so you know. Although even in Rocky lost the end, but the next movies he wins. It's all good.
Yeah, no, it's exciting, but let's leave it at that for now, Chris, and we'll have you back on soon again. There's probably going to be lots to talk about this year, that's for sure, and especially with what's going on, both with the movie and with the slow decline of the world economy. It's really sped up as of late, so it's going to be very very exciting. Is there anywhere else that people could find your information, Chris, where they could go to? I'm going to share your LinkedIn, whatever else you have that you want to share, but if you can tell people.
LinkedIn would be great. It's Chris Galizio, Galizio on LinkedIn. I post all the time about the movie, but at the end of the day, what I'm really focused I'm happy. End of the day, I'm just an average person. So I'm just looking to I'm trying to send a message to the world that the ecosystem of capitalism is broken.
No, exactly. Yeah, well, it's got to be. Okay, so we lost Chris there, but we'll get he comes back here. So we lost you there, Chris, for a sec. But it's always a pleasure having you on, and your knowledge is, for people that don't understand, like, you have a lot of people that like to talk about markets and economics, and certain people haven't been around for that long, and you've been around for a very long time. You've been in market, you've seen what's going on, and you understand the actual mechanics behind it. So it's exciting to have you on. I really appreciate your knowledge and what you have to say, Chris. So thanks for being on the show again, and we'll talk soon.
Anytime, John. Thanks for having me on, and I will talk to you soon.